What's up, members? Welcome to our first lesson. And in today's lesson, we are going to look at market structure or market direction. So please do pay attention as I'll be explaining. This is just the basic of what most of you guys already know, but I want you to pay attention to this because this is what we use entirely as we go on with our course. So as you know that the market has two directions, which is the, I want to be writing, so you will bear with me because I want to make this as simple as possible. So you know we have what we call bearish, bearish market and a bullish. Right? We have a bearish market and a bullish market. So these are the only two directions that we have in the forex market. If we don't have the bearish market, we have a bullish market. If we don't have a bullish market, we have a bearish market. Sometimes we happen to have we do not happen to have any of the directions, and in that case we have what we call a ranging, right? Yeah. So I want to give you an example of what a bearish market or a ranging market or a bullish market looks like in a situation whereby you have the market. Okay. Looks like my network is tripping. Just bear with me. Oops. Right, we're back. Just a minute. Yes. All right. In a situation whereby the market is forming this kind of structures, right? This kind of structure. This is what we call a bullish trend. So whenever the market is pushing to the upside, it forms what we call it moves from a lower low. It moves from what we call a lower low to, so just bear with me. I want to put this here, a lower low, and high, and a lower high, right? So this is, I hope you guys are able to see this. So the market will come from a lower low to a lower high, and then it will come back. When we say lower low, this is the lowest price of the market. When we say higher high, it's actually the highest price of the market, and then it will come back, but it won't come below this level. So because it doesn't come below this level, we're calling it a lower high because it's low, it's high, but it's lower, but it's higher than before. And then and then again we have this higher high, right? So because it's the highest price, and again we have this lower high down here because it is lower but not the least, and then what we have is another lower low. So in this case the market is considered to be in a bullish trend, or a bullish momentum, or a bullish market, right? So I want to show you examples of this bullish market on on the market, how it looks like. So let's come here and do this. Yeah, here. So as you can see on this market, we're having our lower low here, and we're having our lower high here, and then another lower high here, another lower high here, and then we're having our higher high here, our higher high here, and then we're having another higher high here and another higher high here. So this kind of market is what is considered to be a bullish market. So I'm just trying to put this just to show you that these lines, if these lines are pointing to the upside, it means this is a bullish market. So yeah, so it is very important whenever you open your charts, just go on the charts and see to find out the market direction, where the market is going and what is the market going. So because as we go along, we explain why we are busy finding out the direction of the market. So another direction, another example of a direction is what we call a bullish market. It's just the opposite of what I've already explained. So in this case, you will have what you call just a minute. You have what you call a higher high, a lower high, a lower high, and a lower high, right? And then you have what you call a lower low, lower low, lowest low, and lowest low. Why? It's because this is the lowest price at this moment before the market came here, and this is the lowest price, this is the lowest price, right? And you can see that this market is actually pushing to the downside, just like this. This market is pushing to the downside. It's actually telling us that the market is in a bullish trend whereby it's pushing to the downside. A very good example of a lower low is this example, whereby we are seeing the market having, whereby we are seeing the market having its lowest low, lowest low, lowest lows, lowest low, lowest low, and a lowest low, another lowest low, another lowest low, and another lowest low. And then we're seeing a lot of higher lows. So we're seeing a higher low, and then a higher low, another higher low, and then another higher low, another higher low, and high, right? So as you can see, the market is actually coming from a higher point, coming down here, going up, coming down, going up, coming down, going up, coming down. This is actually the behavior of the market. The market will never just move without creating higher highs and higher lows to the bottom, because the market has to go up and come down, go up and come down. It actually moves like a zigzag type of way, going up and coming down, going up and coming down. That is actually what we are talking about. So in this case, you can see how this market has moved. It is actually created higher lows and higher highs, higher lows and higher highs. So yeah, I'm pretty sure now you know how to identify these structures. So lastly, let me explain about the ranging market, whereby the market is gonna go up, come down, go up, come down, go up, and come down, right? In this case, market is not going anywhere. It's just moving within a confined area, right? For a period of time. You see, the market is not actually showing any possibility of going up or going down. So in this case, this is considered to be a ranging market. So when the market is like this, we only have two things which are called the lows and so these are considered to be the lows and these are the highs, the highs, right? So we are going to have lows, highs and highs and lows and lows and lows. Oops, why not tagging? Yeah, like that, right? So we just have highs and lows, highs and lows, highs and lows. Why? Because the market is not pushing up, it's not pushing down. So let me look for an example whereby the market has given us such kind of behavior. I wouldn't, okay, I'll consider this one as that one because most of the times the market will not always do that, but so yeah, let me give you an example of what is happening here. Okay, here. As you can see, the market is just pushing down, up, highs, lows, highs, lows, highs, lows, and then it's actually bringing to the upside. So this is what we are talking about. And then you need to know, you need to be able to identify whenever the market is making new highs and whenever the market is making new lows. And then let's get back to the beginning, right? Let's get back to the beginning. So what you have to know is that the market, let me just draw this, market goes up and then comes down, right? If a market does something like this, it has actually now the market has a lower low and it has a high high, right? So take the market as it has just done this, right? It has a lower low and a higher high. So in this case, what you have to do is to know that the market want to start forming a structure. So in most cases, we just know that you need to come here because you need to see whatever is happening in the forex market as a price, as price. Every candle you see here, it's actually presenting price on the other side. So you need to understand that everything that is happening in the market is actually telling you the price. So in this case, it's actually telling you that let's say 1992 is actually the lowest price, and this one 2096 is actually the highest price. So which means if you are only interested in seeing what is happening inside here, so in this case, what you have to do is just wait. Price always come. If price, let's say price has come inside here and is doing its own thing, and then price has broken your structure, right? Has broken your structure like this, right? Has broken your structure like this. Just know that you have to we just know that this market is actually going to be a buying market or a bullish market, because it wants to create a higher high. By all means, it's going to create a higher high. So if it creates a higher high, what you have to know is that in a bullish market, you only buys, right? In a bullish market, you only look for buys, right? So in this case, you don't react to anything, but what you have to do is you just wait to see if the market will break to the downside. That means it's actually giving you a bearish trade. If the market is breaking to the upside, just know that the market is actually giving you a bullish trade. So let's say in this case, the market has broken to the upside. Just know that by all means, this market is going to come down here, and it's going to come down here and continue going up. Instead, it's going to be creating higher highs, and by all means, it's going to create a higher high. And then just right now, you'll see that the market has created what we call a lower low, lower high, right? Or a higher low, both ways, right? You can see. And of course, there's a new lower low here and a new lower high, right? And then wherever the market might be. So you have to know that if wherever your structure, like this one is a structure now, and then this is another structure, right? You see, again, your structure has been broken. So this is what you call break of structure, right? B or S, right? Or it's represented as just X, right? B or S or just X, right? So let me use this X, but let me use this one. Okay. It's represented as that. Break of structure. So just a reminder, the X is actually representing break of structure, which means this structure has been broken. So in this case, you can see that we're just creating higher highs, higher highs, higher highs going to the upside. The opposite is true. Wherever, let me just remove this. Okay, let me leave them there. But the opposite is true. Let's say the market has come here and it has come broken this structure down here, right? It has broken, and then the market is gonna like this. But if the market has come broken this one, by all means, this structure is going to come here and create new lower lows, right? It's going to come create new lower lows. As soon as it has broken your structure, just know that this market will have to come back and create a lower low. So in most cases, a lower low, the market will always come and create a lower low and continue as it is continue going to the upside. I'm pretty sure you're following. So it's going to continue. Let's say in this case, since we have created a new lower low, let me remove this. Since we have created a new lower low, this is also a new structure. So in this case, this one has been broken, and then this one has been broken. Structures have just been broken, right? So the opposite of what is here is true. In a bearish market, you only look for sells. Don't ever make a mistake. Once you've just identified higher highs and lower lows, higher highs and lower lows. Just know that in that kind of situation, or whenever you just identified the market is pushing to the upside, just know that the only thing that you can look for is buys. And if the market is only coming to the downside, the only thing that you can look for is a sell. So having said this, I want to finalize by saying that in this case, you have to understand that whenever you want to buy or purchase anything, right, you don't purchase the things that are expensive, right? So in this case, this high high is actually telling you that this commodity was expensive, or it's expensive. So in this case, there's no way you can be buying here. There's no way you can be buying here because that's very expensive. You're going to make a loss. You need to buy whenever the price is at the bottom, right? This is where you need to be buying. And that's, let me give you another example, right? Yeah, in this example, in this case, what you have to be doing is, let me just remove what's here and, right? In this case, let's say, in this market, we buy a commodity when it's cheap and we sell a commodity when it's high, right? So in this case, I'll do this just to see my higher highs and higher lows, right? So in this case, you have seen that this is a bullish momentum and the market is actually pushing to the upside. So in this case, I'm only willing to buy here or buy here, buy here, or buy here, or buy here. Why? Because that's where the price is low. Buy here, buy here, buy here. I wouldn't be buying here, because that's the most expensive price. It's logical. Whenever you go to the market, you try to find out what's the most cheapest so that you can buy and have a good and have some to save. So in this case, if you want to sell, you don't sell down here. You don't sell down here. You don't sell down here. Where do you sell? You sell here. And then you also sell here. You sell here. You sell when things are very high. If you actually bought mains so that you want to sell, you don't sell when the mains is too low. I mean, the price of mains is too low. You wait for the price of mains to grow so that you can sell at a good price. You sell there, you sell there, you sell there. That is the whole reason why we're trying to find out what are the higher highs and what are the lower lows. Reaching this far, guys, let me, this marks the end of today's lesson. I'm pretty sure you have understood what I'm actually trying to share with you. So it is very important that whenever you are watching these videos or you are reading the PDFs, make sure you are practicing more so that you don't you have to internalize these things as fast as possible, because we're actually going deeper and deeper with our strategy. So you need to practice more and understand what are higher highs and what are lower lows. You need to understand bullish markets and bearish markets. Otherwise, if you do have any questions, just leave them in the comments or send me an email or send me a message on our WhatsApp or in our private WhatsApp group, and I'll be able to answer you. Otherwise, thank you for watching and have a good day. Great. See you in the next video.